Welcome to another episode of Market Maker Mondays, where we have a look at the dollar index and the indices. I'm going to do a review of the price action last week, and then I'm also going to have a look at doing some projections as well, give you my overall forecast for the macro. I am actually going to touch on the US 500, but also I'm going to have a look at the other indices, see how they are aligning or how they are diverging. And I'm also going to have a look at some Forex as well, because there's actually positive confirmation now. So whereas before the markets looked very consolidated, I think we are actually due to anticipate another move. So without further ado, I'm going to start on the monthly time frame on the dollar index. And if I draw your attention to this, so we rejected this in price here, okay, this imbalance. We've then traded lower, and then we've taken out the sell side liquidity there, and we've actually tapped into this fair value gap. And then we've had a bullish engulfing candle. Now, what we've seen here is from this candle here, we've traded above the high to take the buy side liquidity. We've actually come back down to rebalance some of this volume imbalance here, and then we've started to trade lower. But if I zoom in, if you look carefully, the high of this candle versus the high of this candle, this has now left this fair value gap intact, as well as equal highs. So this is actually an area of interest for me on the macro time frame. So it's now Sunday the 26th of March, so we're actually rapidly approaching the end of the month, but also the end of the quarter. So where we traded higher and we've now trapped in the sellers, we've traded down. Now, if we don't see anything radical happen, i.e. start to see a breakdown to the downside, to see this continue, what it looks like at the moment in this incomplete candle is we've actually traded lower. Now, you do actually get liquidity below and above the opening and close prices as well. You don't always have to go down into the wick because people trail their stops. And also this is where the majority of the orders have actually been building from an institution point of view or an algorithmic point of view. So you can see that we've actually traded off the low of this monthly candle here, and we're actually closing back into the range. So without going down to the lower time frames, I can see that this is traded higher. It's come back down. It's protecting this low now, and it looks like it wants to push higher to at least this, and then come and close in this and continue higher. And then overall, if we continue to see strength in the dollar, then we're anticipating the buy side liquidity to be run out above these. So with that said, what I want to do is go to the 3-month time frame. So overall, the market's been making lower lows, lower highs, lower lows, and then a potential lower high. However, we've actually got some really good structure here where we've actually traded into this fair value gap, and this is almost the end of the quarter, and we're now showing indecision. So what we've actually done is we've actually traded into the 50% region here, and now we look like we want to trade higher. So looking on the quarterly time frame, we could be looking at the consequent encroachment of the 50% mark of this up candle to trade higher, which will actually give us trading into some of that buy side liquidity if obviously we see continuation to the upside. But the downside momentum has stopped in its tracks in a discount PD array. We have a quick look, see, there we go. So we're actually back into a discount at this 50% mark, into this candle, etc., etc. And I'm sure you can fill in the rest of the gaps. So that's where we're looking on the quarterly basis. We've done the monthly. I'm anticipating higher. Now, that's not to say that we're not going to see further seller failure. And by that, what I mean is a failed continuation to the downside, at least to take this low, potentially this low as well. It depends, obviously, what the market wants to do. So we need to be aware of that. On the weekly time frame, we've taken the sell side liquidity here as indicated on the monthly time frame, and then we've actually traded into a discount here. I think it was, you have to forgive me because it's been a while since I've had this on. So there we go. So this is the run which broke this structure, and then we've actually traded into a discount here. And then if you look at price action, we've actually broken this short-term high on the weekly and the daily time frame, and now we've retraced. Where have we retraced to? Classic OTE pattern. Change my drawing tool, OTE, to the PIP, 0.79% retracement for further objectives. So we've got those relative equal highs that we outlined on the monthly time frame, and then we've got these key levels to keep an eye on, and then obviously we're going to potentially see a run on this high. So we're seeing strength in the dollar. They were also talking about bailing banks out in a proxy bailout fashion, which is actually a form of quantitative easing, because they need to go and they need to print US dollars in order to bail the banks out. I don't want to go into that too much just in case the video gets censored, but we're all aware of what else is going on in the world. And if they do bail the banks out, that's actually going to be seen as positive for strength in the dollar, because it shows stability. But in order to actually pay the banks, that money has to come from somewhere. The only place that it can actually come in a fractal banking system, the Fed needs to start printing more money. So that would give us the quantitative easing within a proxy manner. So they're not just printing money to stimulate the economy, they're printing money to bail the banks out, but it has exactly the same effect on the overall strength or perceived strength of the US economy and the dollar. So we've actually completely rebalanced in this now. We've traded lower, we've come back off the lows. So this is now looking like it wants to go higher. So I am going to anticipate a power of through the weekly time frame to come back down to mitigate 50% here, potentially come back into this bullish fair value gap, and then continue higher. So when we look on the daily time frame, we've actually seen a complex pullback, if anybody follows that type of stuff. So A, B, C, D pattern into this. So we've taken the sell side liquidity here, we've traded into this order block, and then now we are starting to push higher. So what I want to see is I want to see seller failure here, either a confirmed higher low and then a higher high. What I would rather see is I'd like to see a daily breaker occur here. So what does that look like? Of course, we have sell side liquidity below this low here. So what I would like to see is I'd like to see a seller failure pattern here in the way of a Judas swing. Obviously, all of this terminology is from the ICT teachings. Everything that I talk about is all ICT, as well as my own experience to sort of fill in the gaps really with what the market's doing overall, behavior and sentiment, things like that. So I'd like to see a failed break below this to take the sell side liquidity, and then a firm rejection. So the elephant stepping into the pool just here, and then when we actually see a higher high here, we come back down, we're coming back to this high here. So this short-term high, when we've actually grabbed the sell side liquidity here, that's actually a breakout on the daily time frame. So everything looks bullish on the dollar index. So I'm going to have a look now on the S&P 500. So I've already got my notes drawn on here. So where we were in price action last week, so if we just retrace our steps, Tuesday, Monday here. So we'd actually traded lower on Monday, back into this buy side liquidity. These drawings are the base of my previous review. So if you want to go back in and have a look at that, they've been adjusted as the market obviously starts to show more information of what it wants to do. So So we've actually got this structure here. So we've got a breaker structure. So we're clearly bullish. And then what we actually did, so on Monday, we had obviously this down candle here, which looked like it was going to want to go lower. And then we've actually had seller failure and a really big bullish reaction here. And it traded into the 50% mark of this CB, which is a bearish fair value gap. And then we've actually got the new week opening gap as well. So what I would do is I would counsel you to apply all of these key levels to your daily chart on the US 500, not the NASDAQ, not ES, because the futures and the cash price actually operate differently. I don't trade futures, I trade the spot price. So just talking you through these key levels, we've actually got a bullish order block just here with the 50% mark here. We've actually shown smart money reversal. Now you see how this is a 1, 2, 3 swing low, but then we've also then come back down for seller failure, and then we've moved higher. So if you look at this 1, 2, 3, we've still come down for a fake move to take out that liquidity. We traded right bang into the CE of that there. Now you compare that with the dollar index. That's potentially what I want to see here. Okay, so bear that in mind. And then go back to Monday's price action. So we've got the dealing range here. There's also a dealing range from this low to this high now on the retracement, and that's what we did there. So we've actually come back down into a short-term discount. And then basically the way that price has moved has been just absolutely textbook. So when you've actually got these key levels on here, if you need to pause the video, please do that. Draw them all in, and then when you go to the lower time frames, the 4 hour, the 1 hour, to actually give you your institutional order flow for the daily run, which is key. And then also the 15-minute time frame as well. So that's actually going to give you the bellwether time frame. And then you look at how those moves unfold. You can see obviously how we are respecting the bodies here. So the wicks do the damage, but the bodies tell the story. Exactly the same here. So where we've actually come back down on Wednesday last week, and we're trading above this now. This to me, it stopped price here, then it's traded above, and then it's stopping price here, it's stopping price here, it's traded above, and then we've actually come back down to crash, traded back into that. So if you think about how many orders are actually built up here now, also think of that in terms of the liquidity, yeah? And then we've actually traded through here. So on Monday, this was actually confirmation that we were going to trade here. I had a successful trade taking the high here. I set it and forget it. I actually went to work, and then we took me out for a profit, nice £2,500 profit. And then we traded all the way up here, which was interesting to watch unfold after I'd been taken out of the market. But yeah, so we've seen a bullish continuation. First step, the lower boundary of this fair value gap, okay, here. And we've actually traded into this weekly bearish order block mean threshold. So when you're looking at the weekly time frame, although the daily looks incredibly bullish, obviously we're going down overall, and we've put in this big inverted head and shoulders. However, this is a bearish order block. So what we've done is we've failed to trade higher. We've come back down into this, and then we're pushing higher. But if you look at the difference, so if we move over here, look at all the momentum here and here, and then obviously we start to see deceleration. And then here and here. Does this look the same as this, or this, or even this? Personally, I don't think it does. I think it actually tells the story now that this wants to roll over. So if we see some buyer failure here, along with the seller failure on dollar, then that's actually going to give us the full confirmation that we're going to come and we're going to put in some new lows below this, or minimum just do Judas swing on this. So what I'm actually looking for is, if you look here, so this bullish up candle here, traded through it with pressure, and then all of the areas of this are sensitive price. So the open, the low, the close, and we've closed right at the high. Probably slacked off a couple of pips there. So I actually had this, and I called this out in the Discord group as well. So for basically just to warn people, anybody that was looking at trading through that level. So here we go. So we've actually had now a failed move lower. So what I would like to see is, I would like to see some of the buy side liquidity to be taken here, and then a push to the downside. Where we're actually currently trading is the 50% CE of this wick here. So that's actually significant. So you want to have that drawn out in time. And I'll show you how that looks. There we go. So perfect there. Just bear with me, I'm just going to have a sip of drink. So we're actually right at this key important level. So this is actually near-term resistance. However, we are going to see some buy-side liquidity here. So we come back up to retest this bearish order block, mean threshold. We've already printed a swing high, but if we traded higher into this and then we rejected, then that would actually give me good confirmation or indication at least that we do then want to start trading lower. So please draw these key levels on. They are incredibly useful because they are continuously reacting with price. I don't want to go too deep into the lower time frames because I really want you guys to be able to take this influence or this input from me and then to go and review your model at those key levels, because my model is going to be different to yours. So I didn't do any trading last week at all, but in between doing my previous video where I'd announced £3,000 worth of profit, I've actually moved up a little bit more. So I started, and this is paper money, by the way, full disclosure. I'm not currently trading live money because I've just bought a house at auction to guarantee a monthly income, so I can actually then quit my job as full disclosure. So not quite there yet as a full-time trader. Very close now. So I started with 137,000, and the reason being is I wanted to start with 40,000 to mimic what it would be like to actually practice for £140,000 British pounds for the FTMO account, where you need to make 14 grand in 30 days. And I basically, whilst I was off and I just getting over COVID, in less than 2 weeks, I made 33. So I know that I'm ready for funding. Not that I'm bragging, but just to give you a bit of confidence on where I'm at with my journey. This is year 8 for me in my trading journey, but it's only been a year and a half since I've been learning ICT. Everything else was complete garbage before that. And I am going to do big videos and stuff on my journey so far, and then filling in all the gaps on a personal level as and when that happens, which I'm really excited for. But when I have a look now, so what does that look like across the other indices? So we've just taken the buy side liquidity here, and we are now trading above this potential order block. So we want to pay attention to this. However, if you have a look at the US 500, so this high and this high, there's massive SMT divergence at a pinnacle time where we are looking to push to the upside, in my opinion. So we've taken the high there, and then we go to the Dow, we're actually significantly lower. So on the weekly time frame, we've pushed higher, we've come back down, and then now we are in the same boat here. So on the weekly time frame, they look quite different. So that's what I'm looking at in terms of the indices. And what I want to do is I want to show you now that it's painting the same story for the, okay, so on a weekly time frame, we've got these relative equal highs, which we could actually push up to take. And then, so we've taken the sell side liquidity here, and then we're currently trading in this. So this does actually look like this is the new leg down and the retracement to go lower. So this is the left shoulder, the head, potential right shoulder here. We could also come up here. So if we trade higher, that shows weakness in the dollar as we push down to see seller failure. And then that might be indicated here as well. And then if we have a look, Euro US dollar, so we are now rejecting this level, and then we are in this pullback. So over on the weekly time frame, with all of this rejection here, this imbalance, we've actually closed below both of these fair value gaps to the downside. That would actually give us the same confirmation that there is strength to come in the dollar. So there we go. So we could come above here. We might actually come a little bit higher on this to go lower. And we're now actually, we've got confirmation of this. So if we trade lower, then we'll be trading into this. So they all seem to be aligning. And that is my deep dive into the indices. I'll leave it there. If you've got any questions or any feedback, or if you have any requests on things that you want me to cover in a bit more detail, please leave those in the comments below. Until I speak to you next time, though, good luck and good trading, and I hope this has been to some value for you. Okay, thank you. Bye.